Welcome to Profiletraders. This is Reza and you're listening to my market analysis for August the 27th. I am displaying here a daily chart of ES so that we can see a little bit what is going on in the big picture. Very well, in few words, in the big picture is that after a very strong campaign of accumulation on the upside for several years and months, finally market reached a level where it started to struggle on the upside, and despite this lack of demand, it started to trade sideways while the volume, as you can see down there, the effective volume showed that there was a very negative divergence building in the market, which I pointed out about it around July the 9th on my Twitter. So in the process of accumulation, when it goes up, of course all artificially, not based on real demand, they support the market. Every time it drops down, they support because they wanted to hold and they want more buyers to come in so that it would gradually go up and up and up and up, and every time that they accumulate in the dips, it goes up, they make money. And then reaches a point where the pigs are so fat and they're so tired of eating this whole distance that some refuse to eat, and markets then stalls. As it stalls, it starts to build a sideways formation while they distribute. You see there they accumulated, here they distributed. In order for you to distribute, you have to keep price steady. If you don't hold price steady and you distribute, you create a collapse. Therefore, what do? Every time market comes down, you buy a little bit of it. As you buy a little bit of it, it goes up, it holds. As it goes up, you sell more and more and more and more to all the idiots, all the dumb money that after such a long move up there realize that maybe it is a good idea for them to get involved in the market. And then when their distribution is done with, then there is no more support for the market. And things that in the process of going up wouldn't have affected the market, all of a sudden when they are released in the news, they start to affect the market sharply on the downside, because those pigs that were involved on the upside are no longer here to support the market. Therefore, we get this kind of violent breaks as we have seen. Now, in this case, as it dropped so drastically, pretty much from 2100 to 1850 in a matter of few sessions, we could have not seen another 2 or 3 days like that. Otherwise, market would have been at 1400, 1500, and at that point there is absolutely no doubt that they would have put a leash around the neck of Yellen and they would have taken her to the tallest tree in Washington to hang her. And obviously Yellen doesn't want such a thing to happen to her. Therefore, because the magnitude of the drop was so severe, all of a sudden near extreme critical level, if broken, it would have caused a complete total crash of the market. Federal Reserve started to show up again, and as you witnessed, they sent that dog by the name of God knows who from the New York Fed yesterday to say that there is no rate hikes in September, which obviously it is the silliest, stupidest statement to hear about a rate hike in the middle of a crashing market. But again, as I explained to you, the rate hike that the Fed has to undertake is not because of good economy and all this nonsense that you hear. It is because of their lack of ability to tap into new debt to pay back their old debt. And in order to be able to tap into more debt, they are forced to increase their interest rates that they would pay on that debt. Therefore, it is indicating that the United States and the Federal Reserve is now starting to encounter a liquidity problem. And they may be literally forced, despite that they would much prefer not only to not touch the rates, but they would also prefer to go on with a quantitative easing till version number 50 if it was up to them. But now they can't anymore. So Federal Reserve showed up, pushed the market up, and then today we heard the absolute laughable. I mean, I was on the ground of my office, legs and hands up, laughing as hard as I could, that our economy grew at 3.7% the second quarter. So magically, we went from negative growth to 3.7%, and guess when this 3.7% announcement came? Today, of course. And that, of course, was good enough to create a very severe short squeeze. And as you can see down there, still, despite that we are almost at 50% retracement of this last leg, there is very marginal real buying coming into this market. Therefore, no question and no doubt in my book, between the level of 2000 to the touch of that trend line up there, which is a combination of this low to this low projected to the future, which are notorious levels of resistance, market should at least pause, and then we should get a very severe retracement back down to retest these lows again. Do not kid yourself. This is not over with, but in every kind of a first breakdown, because people have seen the past of such a stubborn market and move, they are big believers and big thinkers that this time again it is going to be bailed out and it is going to be saved. And that is why you get this kind of retracements of the first leg up or the first leg down in this case. But after this retracement here is finished with, we should at the bare minimum to come retest that low, and it is very possible that we will get what the wave traders call the wave 3 down, which then could be quite devastating and damaging. So one should not be fooled by these sucker rallies. They don't mean anything. The chart is no question damaged. The fundamentals are no question damaged. And the credibility of the Fed is no question damaged. And it is very possible that we are going to come down very brutally and sharply down. Therefore, between 2000 to 2021, for me, is a very strong level of resistance for ES. Now, in terms of support, we are talking about 1967 area, which is middle of today's range. Once today's range middle is broken, then it is absolutely wide open to come drop towards 1945 to 1941. So real support at this stage 1967, and that should not be violated to the downside if they want to take it up to 2000 to 2020. I'm sorry, 2000 to 2020. Now for crude, yesterday I very much so warned you that because the price has dropped so drastically and so dramatically on the downside that we could see a very strong rally. And today, after an initial attempt to bring it down and a failure to follow through in the second half hour of the day, we got a very sharp reversal on the upside, which was absolutely created by very strong buying. We left up, or we shoot up with a lot of singles below, and those singles were never ever challenged for the remaining of the day. what should we expect from crude? We need to go look at our daily chart. It is very possible that because this leg is so long and so much, I would say, abused on the downside, that this could possibly come up to retrace all the way to 45 and 46.10. This should be the long-term extreme resistance zone. Till then, obviously, a little bit of short covering, a little bit of new buying, a little bit of believing that truly this toilet economy is growing at 3.7% and therefore dreaming that this is generating demand for crude. All the combination of the following definitely could have made it gone up as brutal as it went up today, and it still could go up towards 45 level. Therefore, first level of support is at 41.32. If this breaks, then it is wide open to come and test today's open right around 40.15. And on the upside, 3 POCs hanging up there, 44.16 and then 45.25. At which point over there, 45.25, we will enter my personal extreme resistance zone. Now let's look at quickly at gold. It is finding support at this POC. I am not very happy that the POC was not taken out by trading over it. But if we continue to hold this current 11.16 level or rounding it up to 11.15, we absolutely can go for a hit of the POC above at 11.37, and then once we clear that, we are dealing with 11.50 to 11.54 up there. So break down below 11.16.9 or 11.17, and if it wants to break up, I would combine these 3 profiles and select their top and consider 11.31 as a breakup level. That's it for today. Thank you for listening. If you wish to learn my material, you can get all my courses and 1 year to my trading room for $550, money back guaranteed 30 days. Because here we are honest. We don't like to screw people. Have a wonderful evening.